Hello and welcome to My Finance Teacher. First video in 2025. Happy New Year, by the way. And after a lot of your insightful comments on the previous video on Barrick and Newmont, which by the way haven't done well compared to the gold price itself lately, in this video though, let's have a look at a couple of other prominent gold miners, including Kinross and AngloGold Ashanti. This data is based on the Q3 report from 2024. As usual in our model, we look at discounted per share value after all-in sustaining costs, long-term debts, and taxes. And in our model, we only look at proven and probable reserve as well as half of measured and indicated resources, without taking into account any of the inferred resources, never mind any of further exploration success. So to the extent that the market price might actually correctly value some of the future potential success, the fundamental valuation presented here might be different. But as you see, we like to lean conservative here by looking at relatively more established reserves in the ground. And of course, the data that we plug into the valuation model includes the prices of gold, silver, and copper, the amount of reserves and resources in the ground, the costs of extracting those reserves. We look at all-in sustaining costs. We look at long-term debts and taxes. Of course, we look at per share value with a discount rate of 5%. And we have a bit of a secret sauce on insider shares, as larger percentage held by insiders helps to align the incentives of the management with those of the regular shareholders. Now, starting with the gold price scenarios, as in the previous video, as well as all of the videos for Q2 2024, our gold price scenarios include the conservative price, where we plug in the gold price of only $2,000. The balanced scenario plugs in the gold price of $2,300 an ounce, and our optimistic scenario plugs in the gold price of only $2,600, somewhat below the current market price. So as you see from our scenarios, we are leaning quite a bit into the conservative valuation. Moving on to what the miners have in the ground and the costs of extracting those resources out of the ground, Kinross has gold and silver, while AngloGold Ashanti has gold and copper. AngloGold Ashanti has significantly more gold reserves, that's proven and probable reserves, and these reserves, I assume they declined from Q2 numbers by the production, which is just under 0.6 million ounces per quarter for Kinross and 0.7 million ounces per quarter for AngloGold Ashanti. Moving on, Kinross has nearly 24 million ounces of silver, and AngloGold Ashanti has nearly 3.3 billion pounds of copper. Those are all proven and probable reserves, somewhat certain. Beyond that, they have measured and indicated resources, where AngloGold Ashanti again has much more gold at nearly 60 million ounces and 26 million ounces for Kinross. Kinross also has 34 million ounces of silver resources, and AngloGold Ashanti has 2.9 billion pounds of copper resources. In addition to all of these, Kinross and AngloGold Ashanti also have inferred resources, but we don't include those into our valuation. As for costs, while Kinross has much less reserves, it also enjoys much lower costs at only $1,360 per ounce of gold. For AngloGold Ashanti, the costs are quite a bit higher at $1,550 per ounce of gold. These numbers are from the midpoint of their confirmed 2024 guidance. Moving on to debts, shares, and discounting, AngloGold Ashanti also has much more debts compared to Kinross, so generally with higher long-term debts and higher all-in sustaining costs, AngloGold Ashanti would provide a greater leverage to gold price. The long-term debt for AngloGold Ashanti stands at beyond $2 billion, which has increased by just $2 million since Q2 this year. The debts of Kinross haven't changed compared to Q2, and they stand at $1.25 billion. Kinross also has not changed their number of shares outstanding, which stand at 1.23 billion shares outstanding, and AngloGold Ashanti increased their shares outstanding by over 83 million shares into over 503 million shares outstanding, out of which the insiders are holding 0.19%. It's an increase of 0.1 percentage point, which is quite nice, to be honest, while insider holdings at Kinross have decreased by half, now making up only 0.14%. I apply 7% discount rates to both of these during their average mine life based on their current annual production. Looking at the proven and probable reserves themselves, the average mine life would be 10 years for both of these. If you add half of M&I resources, that extends the average mine life to 17 years for Kinross and 20 years for AngloGold Ashanti. For simplicity, I also just apply a flat tax rate of 20% on all of these miners. And I do report cash here just as an additional risk metric, but cash is not actually included into our valuation model. Still, we might want to have a look at cash, as I said, as an additional risk metric, and cash stands at $473 million for Kinross, which decreased by just $7 million from Q2, and AngloGold Ashanti has more than $1.23 billion in cash, which has actually increased from Q2 by over $230 million. Before we move on to the most juiciest part of the video, let me just remind you that information is key in the modern fast-paced world of investing. So for the most detailed, informative and regular reports, including the sneak peeks into the junior miners, make sure to join us at myfinancesteacher.org. Check out this Juniors in Metals category, and beyond that we provide the best uranium report on the internet, as well as nickel report and the most informative sneak peeks on some of the most outstanding firms on the market. So make sure you are an informed investor. Coming back to the valuation model, with all of this data in mind, plugging all of that into our conservative valuation, where we use the gold price of $2,000 and we look at only proven and probable reserves in the ground, gives us a valuation of nearly $5.3 for Kinross and over $13.3 for AngloGold Ashanti. Clearly these are abysmally low, but you can look at this as sort of an indication of what might happen to share prices if gold price just drops out of bed here. Moving on to our balanced valuation, we plug in the gold price of $2,300, and even in our balanced valuation, we are still valuing only proven and probable reserves in the ground, without including any of the M&I, never mind inferred resources. That gives us over $8 for Kinross and over $23.6 for AngloGold Ashanti. Next, most excitingly, let's have a look at our optimistic valuation, plugging in the gold price of $2,600. And here we value the proven and probable reserves in the ground, as well as only half of M&I resources, never mind any of the inferred resources, giving us over $15.8 for Kinross and over $57.3 for AngloGold Ashanti. Wouldn't that be nice? Isn't it around 60% higher than current Kinross price and over double of AngloGold's price? Again, showing you higher leverage to gold price. Now back to you. Let me know down in the comments below what you think of the prospects for these couple of miners, or perhaps some of the others that you have in mind. Have a terrific Tuesday. Bye bye.